All right, good morning, everybody. Let me fire up the live stream in here. Good morning, everybody. I need a sound check. Nothing, huh? All right. Thank you for that, Brooks. The sound issue is usually in the Bullish Bears live stream room. If you are not a Bullish Bears member, we do have a 14-day trial. We have a streaming room where we schedule streams twice a day. And typically that's where I have audio issues. Good morning, everybody in the Bullish Bears room. I need a sound check. Thank you, EM. I appreciate that. Good morning, Eddie. There was a tweet on the public Twitter from Dan this morning. I believe that was Dan. It's not posted with a name. Morning gaps, VIVE. It's a really low float, 57% short float. That one could be an opportunity to really give us a game today. Squad, ENPH. Tesla was got an analyst rating, so that's something to take a look at. SPCE, which has been on my scanners for a couple of weeks now, actually, doesn't have bad options. Just a little bit of a spread in there. It's not bad. The problem that I've had with it is it just doesn't have any technicals to it. There's no technicals on something that's going parabolic. But other than that, SPCE as an intraday play has been a pretty good thing to do. So good morning, everybody. It is Wednesday, February 19. This is Signet, the Bullish Bears. We do not have an oil report this morning, so USO is not going to be one of our game plays. Of course, it's still a great thing to day trade. USO and X Steel. Correlating those two can sometimes be a lot of fun. And then we're just going to be looking at whatever happens to be moving. The Dow 30 is kind of my lean on go-to. There was a stock bot list. The most popular or top 5 stocks that kept showing up in all of the lists, which include like Bollinger Band, Squeeze, Slingshot, reversals from high, pocket pivots, Gilligan's Island, calm after storm, all of that good stuff. Those top 5 I'm going to be posting into the chat now. They are not trade recommendations, but rather something worth keeping your eye on as a possible volatility play. And really that's exactly what it comes down to, right? The language might be a little unfamiliar to newer traders, but we're just looking for something that has the potential to move. And when you trade in the marketplace, the word volatility is just another fancy way of saying movement. When it has a high volatility, it has the potential to make a pretty good size move. So in the first 5 to 10 minutes when the bell rings, we'll take a look at Market Watch, get a gauge on the money flow moving into and out of the market, perhaps try to identify where structure will be found. If we make a fade at the open, which is typically what we would expect after a market had gapped up in the overnight hours, it wants to close the gap before it does anything else, right? So resolution of the gap is the first thing on the list. Once we get that resolution, then we will start identifying range-bound markets and looking for open range breakouts. It's the same old thing we do. See a couple of new names, but mostly a lot of real familiar faces. Hopefully, everybody had a nice long weekend and took the opportunity to learn something new, spend some time with the family. For you newer people, there is a room drive here in the live stream room. It's in the upper right portion of your screen. It looks like a folder. You click on that, you will find a journal template, trend day checklist, which includes trade setups that we use on a trending day versus a range bound market, market identification, nightly routines, and indicators and all that other good stuff too. We try to keep cycling things through there, but always take a peek and see what happens to be in there right now. We did gap down the other day because of Apple's guidance. The NASDAQ has already completed that, and I believe the ES also has started working its way through that box. It's important to recognize. We want to fill the gap. Surprise, surprise. Expecting a pretty decent level of correlation today. The way that works is around 80% of the marketplace should remain correlated. If SPY is running, if the Qs are running, then Apple, Microsoft, Caterpillar, Facebook, anything that is not bearish should be participating in the same run. The correlation. The reason that that's important is because you can look at, say, SPY and decide, well, it's bullish. I'm going to go trade something that has a higher beta, and then look for something with maybe a 2 or a 2.25 beta. That way, SPY might move $1, but what you're trading will move $2.50 because it has a 2.5 beta compared to that $1 move. Right? When you're day trading and you take a trade in SPY for a $1 move, you could have traded something else, making a $2.50 move. Well, I don't know about anything with the MACD. You know, back in the 70s, they used to get these books in the mail where they could draw their chart out, and they weren't quite sure if they had the wick right and the body right, and if they had the position of the chart correct when they were drawing these out. So they would use this formula for the MACD, and then they would draw that at the bottom of their chart. Because back in the 70s, most people really didn't have computers, you know. So, of course, it made perfect sense. In this day and age, I don't need to draw out my chart, right? I don't need to worry if I have the ratio of the body of the candle correct with the wick and if it's trending or not, because I can freaking see it because the computer shows it to me. So trying to look at an indicator that was built in the 70s to determine if we're, quote, bullish or in a divergence is kind of a joke, right? It might be good if you're on a weekly chart or a monthly chart to kind of give you some perspective, but anything underneath a week, yeah, you know, yeah. Same thing with the RSI. Same thing with the stochastics. You know, in the 70s, those were probably really great tools because people were still drawing their charts in a book. But now, this is a triple X leveraged product. Be aware of that and be cautious with it. This, just like all of the energy sector, has been in a good, clean trend to the downside. It's a nice bear flag formation. I don't expect that to change in the long term. So you could get a little bit of push to the upside. You could even begin looking for the bear flag failure trade strategy or trade setup that I've been reviewing with people for the last 2 weeks, which since this one has already partially completed, I'll show you what that looks like. You have a confirmed trend to the downside. It builds structure at the bottom called a basing pattern. Then it forms a range and breaks out of it. This right here is called the Busby. So after it breaks out, more than not, it'll come back and test, and then it will continue to break. That's a failed bear flag pattern. It's a really great pattern in a bullish market. Energy, however, hasn't been a bullish market, right? So you got to take those failures with a grain of salt. It didn't reciprocate, which is what the pattern is supposed to do, right? It's supposed to make its way back up to the top. It didn't do that. It was still a pretty decent run. If we step down into this, we recognize the same setup is forming because it's a bear flag. So the bear flag is what you would want to look at. If you're looking for a little bit of divergence today or even this week because of oil or oil report or anything like that, I get it. I absolutely get it. But if your attention was brought to it because of the MACD, the moving average convergence divergence indicator, flip a quarter, roll the dice, get the Ouija board out, check moon phases and wave cycles in the ocean. All of that would be as good as using that MACD indicator on such a small time frame. Market watch, calendar. The e-commerce retail sales, FOMC minutes today. The PPI. You know what you do not see here today? The oil report. That's what you don't see here today. What I mentioned when I first started this stream, it is not today. Oh, come on, Creed. It matters for more than that. My best trades came from checking the moon and the stars. Yeah. They'll be as relevant as the MACD. Let me get convergence with the MACD and the RSI and the stochastics. And when all three of those line up with the moon and the stars, and we time the wave of the ocean correctly, we're going to get it. There's nothing wrong with indicators, however, so as much as I joke about people that use them or using them in general, if they help you make profit, then by all means use them. Don't let the fact that I poo-poo indicators hold you back from using those indicators as you continue to learn and grow as a trader. And hopefully, just like training wheels help you ride a bike, you'll get to the point where you don't need the training wheels anymore, and you'll take them off of the bike. One of the things that is worth watching are products that have had analyst upgrades and analyst downgrades. Not because we care that an analyst says it's a buy rating or a sell rating or a hold, more from the idea that when they put out a new rating or they upgrade or downgrade a product, it increases its volatility and it gives us an opportunity to trade with that volatility. So every day, if you go in and check live news on Thinkorswim, you can see the analyst upgrade list. I believe it comes out around 5 in the morning, right there. It's a list that's put out, which is why it's called a briefing. And it's not organized or categorized. If you was to pay for a site, something like Tip Ranks or something like that, that you could get them cleaned up and organized and sort them out by sector or industry or anything like that. Of course, that costs money. So if you're willing to do a little bit of work and some diligence, it's not a massive list you can see, right? So you could go through and weed it out, figure out what you don't want to trade out of that list, and then whatever is left, put it on a watch list for the day, maybe set some alerts. It's just a really nice uh, short list to kind of get started in the day if you don't already have something to look at. And of course, on the Bullish Bears website, we do have our trade lists, and we have the gap scan. So finding something to trade really isn't a problem. I never have a problem finding anything to trade. Bell time, people. Warning, warning. Warning, warning. So do be aware, we do have the gap scanner, and I've never, quote, found a winning trade. I see my setup, I pull the trigger, the setup fails, or it follows through, and I have a trade. But every time I've tried to build a scanner for, quote, winning trades, it just doesn't quite work out. That button is missing for some reason. I don't know why. Where's that winning trade scan button? Some pretty decent structure in Dow lately. It is the big buttons, and that's what it is. I can't stand them freaking big buttons, and since I never have them on, I never find I never find it. Dow's got a pretty decent structure. It's been trying to hold this range here. It dipped below there yesterday. Buyers brought it back up. We'll get to the sectors here in a moment. Yeah, that's what I thought. The bid ask is still a little off in here. It's not worth trying to day trade this thing, but maybe putting on a longer term trade could be viable. At 10 cents, it's just not worth it. Too much slippage. What else do we got in here this morning? JP Morgan. Yes and yes. Kind of a failed pattern. So if we're looking for anything bullish with JP Morgan, we're going to want to aim for the open of yesterday's market. It's going to put us around that 137 and a quarter, 137.30 ish. It's a good 25 cents if you don't try to hit the bottom and hit the top. Grab a little bit of the middle. JP Morgan is not a bad product to trade. ENPH, Bradley says. Yeah. Let the good times roll, huh? So in something like this, it brings me back to Tasty Works, taking the contrarian perspective, looking for this to resolve back to the mean, say in the next few weeks. As a trading perspective, recognize that it did get above structure here, and look at this market compared to a lot of the other energy sectors, right? You can't miss that trend to the upside. look at that uh, in comparison with its peers, right? Neighbors, Patterson, Precision Drilling, uh, Heimlich and Payne, H&P. If I remember right, there was some news about this one. What was it, last month? About some new big pocket of energy that they had found. Huh. Anywho, putting just a little bit of the fundamentals into the technicals can get you a lot farther than just trying to run the technicals by themselves. Counting back on the Iron Condor in the last 13 weeks that we've ran it, uh, it's had 9 winners and 5 losers. If you tried to run the Iron Condor all the way to Friday, the market makers have been a bit jittery on their ability to calculate expected move. Real quick, we'll take a peek at the market watch. We don't have any type of divergence in here today. You can see that the Dow Jones has 23 going up with money to the high side. The S&P is my go-to product. 70% of the S&P 500 is moving up, and the money flow is to the upside. So no divergence here either. Not a big surprise, but it doesn't hurt to take a peek because sometimes you get that opportunity in the morning. With a market on the move like we have today, taking a look at the sectors can really kind of put things into perspective. What is carrying this market? What is helping us in the move? When I ran a scan on the sectors earlier this morning, there was more strength in utilities than anything else. Utilities and then services, and that was the 1 day performance. And then on the weekly performance, utilities and service, and then conglomerates. Technology was actually the 4th in line. The analyst recommendations was a little different. Healthcare, technology, services, and then consumer goods were tied with services. So the analysts are a little bit off on what we're actually seeing in the market from that perspective. A little bit of weakness in energy and consumer discretionary. For those of you who are not familiar with this setup, the lower 3 here are risk off or defensive sectors. The 3 in the middle are your midline sectors, and then the top ones are risk on or offensive sectors. On a day-to-day basis, when we have a market making a move or not moving at all, taking a look at the sectors to see who is participating or who is holding us back kind of gives us an idea of what to anticipate or expect through the day in our trading, and perhaps find trade opportunities as well. So the consumer discretionary in the lower left, XLP, that's more of your household consumer discretionary, bourbon, toilet paper, the essentials, the must-haves that you're going to buy, whether it's a good economy or a bad economy. And the consumer discretionary from the other side of the perspective in the upper right corner would be more of your cruise lines, resort, hotels, frivolous spending. That would be reserved for people who feel like they've got money to spare, right? Or they're in a good economy. The ones that are often overlooked, but I find absolutely critical in what we do: XLI, the industrials, and XLB, building materials. They're not as sexy as tech, and they're not as fun as finance. so they get ignored and shoved in the corner a lot, but we need their participation. So when XLI gets off the bench this morning and really starts to pull its weight, we could get a nice move in the market today. We do have a couple of issues down here with healthcare. That is XLB, middle bottom. So that one and energy XLE are the two that are dragging their feet this morning. We need them to get off the bench and get into the game. Looking at the Dow Jones here in the watch list, look at the 4, 5 that are red, and then of course we got a few that are almost flat. Merrick, say energy, bear flag forming. United Technologies back to structure yesterday and bounced off of it. Nice and clean. Travelers. This thing is like a poster child for an iron condor. Boeing working its way back up. Notice the candles, the pattern, the story that's told here. Started making its way back down and dropped off. The pattern ran out of steam. We know that a market pulls back to gain energy, and it burned a lot of energy in that move up. No surprise that it wants some or needs some. Nice clean pullback to structure. The rally up story is told. If it was me looking at Boeing, I would take the trade through the middle of the product. Comfortable with the way that I do business in the market. A nice 5-point move here. 340, 335 credit spread, split the difference in the middle. 255 in credit. That's better than a 1-to-1 risk to reward ratio. With structure, you just need Boeing to get back above 340. Now, if you're uncomfortable with that, I understand completely. Actually needing something out of the marketplace, we call that an ask. Building a trade with an ask can get frustrating for newer traders. Step out a little bit. This 335, 330, you don't need anything from the market. It just needs to not come down to the 335. This is a really great trade here. I'm going to post this, and I'm also going to take this in my account. I got to fire up my options broker, though. Wasn't expecting to take a trade this morning, but wasn't expecting such a sweet setup. So for those of you who are a part of our Bullish Bears community, you will find that trade on Twitter, because that is where I'm going to be posting it. If you are not a member and you do not have access to our private Twitter, you can always come over and sign up and hop on the team. All right, and that trade should be able to copy and paste right into your Thinkorswim account. If it doesn't, and I've noticed this happen a couple times, it's because Twitter broke the sentence structure when you copy and paste. So paste it anywhere that has a place for you to write. You could even perhaps paste it right into the chat room, just anywhere to where you can see the code pasted. And then you just have to hit the space bar and get rid of the spaces that are in it, and you'll be able to copy and paste it. I don't know why it's been doing that lately, or maybe it's just me, and I've noticed that it's done it lately. let's see, what did we got here? What did we got here? The one thing, yeah, we won't have to worry about X dividend for this time frame. No worries. All right, so we got that one in the mail. Let's see if we get filled on that or not. And then we'll just let it be, let it be. All right, what else you got, kids? Anything in particular you want me to go take a peek at? If not, we'll just keep working our way through here and perhaps find something else worth trading today. VIVE. Yes, of course. Everybody out there sees something like this and says, oh my God, I've got to get in it. Not sure what you want to do with this or what you think I could tell you about it. It went parabolic in the after hours, and it's moving back up to structure. Your imminent danger would be the 221. Hey, it got filled in Boeing. Sweet. So 221 is your target back to structure. It's moving with a pretty decent Fibonacci pattern. You can see the pullback nice and clean. NVIDIA, exactly the same thing. Nice clean move into the close. This is a product that meets the watch list criteria for a market that is moving strong into the close. You watch it the next day looking for that move to continue. And the way that I typically do this is I run my Fibonacci in reverse. Instead of going from high to low the way we typically would, draw it in reverse. And I used to have minus 236 and all these others here to the minus side. That way I would already have my price targets drawn out up at those levels. Since I don't have my Fibonacci built that way because of classes that I was in, we'll do it the other way around like this. Notice that it has already hit the 168 or the 618, I mean, from this structure yesterday. Right now, you would be wanting to look for a pullback opportunity that is confirmed. You had the pullback here all the way back to the 3066. Let's step into a 1 minute so we actually got a pattern to point out. I don't trade on those time frames. I don't even like those time frames, but there is your structure easier to see. All right, your leg up, pull back to structure. Leg up, pull back to structure. Notice the structure is the left each time. So in this last leg up, it pulled back exactly where you would have expected it to pull back. And now it's rallying up for the next move, right? And then for your next move, of course, looking for a higher high and then pulling back to structure and then a higher high. You know how to do it. Not sure what you want me to point out here on NVIDIA other than the fact that it is trending on a 1 minute and you've got some pretty decent structure. Just watch the overhead. This has already moved over 4%, and it's a $300 stock, so be aware of that. SPWR. This has already made its move pretty decent, 8.5%, pretty close to a half of a percent. Over 8%, we can say that with confidence. Struggling to get above that round number 10, but it's making a push for it right now. That is going to be your rejection criteria. It needs to get and hold above that 10. If it does, it might be able to maintain itself. If you're not in this yet, you're a bit late to the game. You're going to want to, right there, you're going to want to see this get above that 10, which it failed to do. Not sure what news or market caused this situation. There it is. Apparently, the investors weren't happy with what they reported and then changed their mind. See someone's paper trading in the futures this morning. So pushing back up, look left to structure. You can see even if we get past that 10, we got the 10-10. That dime is going to be an issue. That would be your next trouble spot. Good morning, Ruffian. GNPX. Oh, what a beautiful, beautiful product to trade. Keep fading it, people. Keep fading it. There's your bear flag, nice and clean. Let it pull back to structure, maybe that 4-5 range, and then hammer it down again. Be aware that we could see bear flag failure and a change in sentiment. If you look left, you got this market structure back here. This might want to validate the range, and what I mean by validating the range is this used to reside down here, and everybody was pretty happy with it. You can see the algorithms were having fun with it. Everybody was just pleased to have it there. And then it broke, and it ran to a new range. Think about your car driving on the interstate. It changed lanes, and now it needs to prove that it wants to stay there and that the investors are willing to accept this value. So it needs to prove that it can maintain this new elevated position in the market. Failure would be looking for it to come back down into the 3.25 range. What else we got here? AMD and Kroger. My family worked for Kroger for over 20 years. One of the first jobs I ever had was at Kroger. Nice liquidity sweep to the upside here. It managed to open and get above yesterday's high to grab all of the resting orders up there. Nice play. Nice play indeed. This could be a nice double top failure pattern too. Step into the lower time frames. So game this out. It ran yesterday up to these highs. Noobs jumped in at the top, put in their orders. And since then, smart money, what do they call it? Not smart money, street money, sold down here with their orders up here as well. It just builds a nice resting order package. Algorithm kicks in, jumps up there, triggers all those orders, and it is game on. Trend is clear. This is maintaining itself well within the mean. It's not too far away. Hasn't outstepped its bounds. I know someone who took that short yesterday and held it into the close, which I think was a really bad idea. I thought it was a bad idea yesterday when they held it into the close, but the trade opportunity to go short had already passed. Think of AMD in the last 9 months or a year has become something like Apple, Tesla, Microsoft. This thing has just marched its way up. One nice way of looking at that is take it out to the weekly chart and look at AMD. I mean, come on, look at this thing. you should not be shorting AMD, right? If it gives you a pullback opportunity like this, we would do to AMD exactly what we did to Microsoft a while back and what I'm expecting to do to Apple. Take a long position at the money and get as much credit out of that bugger as you can. Take advantage of that pullback. Because until this entire bull market stops, something like this is just going to continue to go up. Let's go take a peek at Kroger. Nice gap. This needs to validate and hold the range. That 29 range right here is really key. It just broke the 50-cent mark, 29.50. If we look left to structure, if it fails this structure, it is game on, back down to the 28 range. I do not think that it's going to hold at this validation. But what I think doesn't matter, and nobody cares. It's what can we trade. So if you look at this from a different perspective, there's your bear flag, and there's your bear pole. It's a bit extended for my taste, but it is there. Notice the liquidity sweep that we were talking about a few moments ago. What else we got? GLD, which is perfect timing because somebody had asked about gold futures on the Twitter or on the YouTube. Gold. Breaking structure to the upside. Let's take that out to the weekly for a moment. Put the box around it. There was your fake out breakout. And here was a new breakout opportunity with a follow through with strength behind it. We zoom in a little bit, look at that a little cleaner. I've got to get rid of that. That's better. Now if we adjust this box a little bit, you can actually see this instead. And then you got the Busby and the pullback for validation. Another run, got hung up, failed, gave it another try, and now we're on the run. This really does need to hold at support and validate that this level is the new price that everybody is happy with. I would be comfortable with this anywhere around that 150 range. 150.50. Say back out. Don't really need that much time. Maybe April would be more appropriate. So this is a $2 wide trade, and that's 50 cents. That's 1/4 of the size of the credit. It's not bad. Another way that you can look to see if you're, quote, getting enough juice is to look at the expected move and run a formula that Tastyworks has promoted a few years back. It's not my formula. Can't take credit for it. But one of the issues that we have when we're building a credit spread is we're always asking, are we getting enough bang for the buck, right? We're the seller. Are we actually selling it too cheap? Or are we getting into a trade that's not offering us enough to make it worth our while. This is kind of splitting hairs when it comes to that. There is a little more, well, not much. There is a little more up in the 30-day range if you go up to March 30. You can see it's got a little bit more of implied volatility. I don't want to mess with that March 6th. I can see it. You can see it. Notice it's 13 here. Just pointing that out. Even here, though, stepping back a few points, maybe swap this over to a delta. Yeah, I'm pretty comfortable with a 12. Run a 12 delta, 2 points wide. I'm not comfortable with that much money. Not enough. Not enough. It's a decent market, though. You can see there's not a lot of spread in here. Penny wide market. This is exactly the kind of stuff you want to trade, right? Not 20, 30, 50, $1 wide bid-ask spread. Just getting chewed up. The red list is getting bigger here in the Dow. Got a lot more markets dropping below their open. McDonald's. ¿Por qué, güey? Why did I do that? $10 a.m. funny inbound always reminds me to kill the stream. So everybody over there on the YouTube page, appreciate you showing up today. Always a pleasure to have you guys. Come by the Bullish Bears website. It's free. You can't argue with free, right? I like free. 14-day trial. We got a chat room. Plenty of people to help you, point you in the right direction. And what do you got to risk? So look forward to seeing you. And there will be a streamer this afternoon around 2 o'clock. Every day we have a streamer at 9 and a streamer at 2. I will be back again Friday afternoon for in-depth options education. On Friday afternoon, there really isn't much more to do except to plan out some good, strong swing trades and talk shop. So look forward to seeing all of you there.